It's Sunday, the 7th of February 2016. This is a US dollar gold price chart. I've also got the Australian dollar gold price up there, which I'll talk about in a minute. Obviously, it's been a really good week for gold, up about $50. Really strong close as well on Friday in the US. Now I've shown this before, but I've got these sort of descending ranges and these uptrends as well. I think we've been in this zone for 3 years now almost, and I mean, usually we've had these $100 moves and retracements. I mean, that's been the most common move up. But then occasionally, toward the end of 2014 and at the start of 2014, we saw these bigger ranges, more like $200. So at the moment, you can see that was similar there as well. So at the moment, we could be heading for something similar. It's really got, you can see in the mid-range here, it's sort of consolidated, and then there was a big breakout. I mean, we haven't had quite the consolidation this time, but we've really got that, what that looks to be that breakout to that next, heading toward the top of this range around 1220. The other thing to note, obviously, is this massive resistance zone, which, I mean, this 1180 was support a couple of times here, or maybe 3 times, I guess. And then when it broke through, eventually it acted as resistance in October. So it's going to have to crack through that first, and that, I guess that's the, the 2 or 3 year resistance level. So that's an important move toward the, I guess this week could see 1180 on Monday. I think I wouldn't be surprised for it to pull back from 1180 and maybe go back toward this 1150 zone. But I think you want to own gold and gold stocks at this point, particularly US dollar gold stocks. But I mean, the other thing that happened on Friday night Australian time was there was really what I've called the Goldilocks situation before, where it was a falling Australian dollar and a rising US dollar gold price. So, which is traditionally not how things have played out. But you can see here the really bullish sort of flag formation. It's broken out. You can see if we just do a little flag there, it's broken out above that now, and this looks like it could get another leg up and break through this zone of, you can see this resistance zone about 1660. It's hit there 3 or 4 times in the last 18 months. But this move here looks like it could be a continuation pattern from this little flag at the start of the year. So, I mean, conceivably it could head towards 1700, 1750 on a breakout there. Now that's been a great scenario, I guess. I mean, you want, from a gold price perspective, Australian dollar gold price perspective, we really haven't seen the domestic economic weakness impact the gold price as much as sort of external factors. But I feel like gradually the domestic economic weakness might start to play a bit more of a hand and pull the Australian dollar down and sort of make it independent of the gold price. And in that situation, Australian dollar gold can go a lot higher, which will benefit all the Australian producers, obviously. And most of those Australian producers ended really well on Friday after consolidating for the last sort of 2 weeks after reaching, so close to 52-week highs. So I'm pretty bullish on both the US dollar and gold and the Australian dollar gold producers. Probably more upside in the US dollar producers since they've been so beaten up. But yeah, these Australian dollar gold producers can go a lot higher as well if this continuation pattern breaks out above this 1660 sort of zone.